Hello guys, this is DTrader, and in this video I will explain what is equilibrium and how to use in the markets. So by theory, equilibrium is the midpoint of a given price range. It serves a reference point for dividing the price range into premium and discount zones. The equilibrium represents the fair value of the price over the range being considered. As I told you, equilibrium is the premium and discount zones in the market. So this is how I use equilibrium. This may be different from the other traders that they use equilibrium in different ways. I To identify premium and discount zones, I use Gunbox. This is my settings for Gunbox. I'll take here text. This is discount zone of the price, and this is premium of the price. So when price goes in the discount zone, there is big chance that price might reverse, might go up. It doesn't matter how much money you have. Even people who is millionaires, they always trying to seek for discount price. So if I see watch for like $30,000, and in another market there is that watch costs like $27,000. Of course, I'm gonna buy that watch for $27,000 because I save up 3 grand and I get it for like cheaper price. So banks is the cause of why markets moves. So they have so much money, but they always trying to get discount price or the premium price. So for premium price, they want to sell high and they want to buy low. So when price go to the premium price, they always trying to sell, they always trying to short, or if it goes in a discount price, they always trying to buy. Now I'm gonna show you in the charts here. So how you identify it? It depends on what trend you are in. If you are in uptrend, you have to take your low of the uptrend and your high like this. So here, this is the discount zone, and upside is the premium zone. So when price, as you can see, price tapped into this discount zone, broke the structure and rallies up. This is one of the confluences that you have to use in a market that I use in my strategy. So now I will show you the premium zone of the price. So we are in a downtrend. You can call it downtrend, I don't care. Take this high and take this low. As you can see, price tapped into this premium zone, had brick structure and rallies down. Now I'm gonna show you more examples. Like here, we're in the uptrend. So we take low of the price and high of the price. So as you can see, when price tapped in this zone, broke the structure here. I'm just entering in because I also have here a liquidity sweep. Here we broke the structure. This will be really good trade. First, I will take my first take profit will be start of this fair value gap because we are in downtrend and this fair value gap is really strong. So first take profit will be here and second take profit will be here. And as you can see, we did not took the second take profit, but it's still good trade. Now I'll show you another example for premium zone. Here we take highest point of the price and we took low of the price. So as you can see, when price tapped in this zone, we rally down, as you can see. And how the price respect these zones. Look how the price respect these zones. This is not trading hours. That is why this equilibrium didn't work. I mean, it does not work 100%, but it's one of the confluences that you have to have in your strategy. So right here, I would say yes. Here, take high of the price and low, and as you can see, as price tapped into the zone, broke the structure here, I will enter in this position here. Now this is long. I'll take short position. Here, my stop loss above these highs. And my take profit here. The first take profit, and second take profit can be like where, like here, of this favorable gap. This is a really simple thing, but really useful in the market and really important to know. So as you can see, this is how markets work. So we are in uptrend, we take our low to the highest point. When we enter in this zone, there is big chance that price will go up. That is all I have to say, guys. Hope you like this video. Bye.